Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and 10-year note yields. Saw a big move lower midweek, but unable to hold it. We made a new year-to-date low in the 10-year note yield, and we saw it suddenly creep back higher. Now we ended up selling just lower on the week to give us another consecutive week of lowest yield since June. But I think that right now it seems to me that the market is kind of starting to find its footing again. We made the new low. We were unable to hold it and sustain it. And now it all comes down to what happens next. So the market's pretty well priced for what's uncertainty on the debt ceiling, uncertainty on tax reform. You may throw in a little geopolitical risk in there, and it's all going to come down to what happens next, because we were looking like we were going to move towards 2% in yield, and now we're back closer, we're back at the midpoint between 2 and 2.25. And I think right now the market's going to kind of wait and see what happens post jobs number. Now, what did market volatility do? Market volatility has been holding steady for most of this week, which is a sign that things are actually higher. When we tell you volatility is not going down, it's a sign it's going up. But market volatility finally saw some selling today post the data. When the number came out, it was actually not a very strong number, especially when you look at some of the average hourly earnings numbers. And the market initially rallied and yields went down, and then it knee-jerked and went the other way, and it was kind of a fade trade. Recall last week heading into the weekend, we hit those low yields, and this wasn't the case this week, despite having a holiday weekend and despite the mediocre jobs numbers that we got today. So what are we looking at for next week? Well, next week we do have a slew of Fed speakers. They will likely be trying to talk about the Fed tightening, which is right now only priced in for about 30% odds for the rest of the year. And it seems to me that the market seems to be losing its luster for more Fed rate hikes, or at least any Fed rate hikes. And we have a number of Fed speakers not only speaking, but speaking on the economy and policy, which is rare. So we're going to have a full slate, a full assault, I think, on what the Fed fund futures are pricing. And I wouldn't be surprised if there's a little bit of a bump in those odds higher next week, just based on what we're going to hear. So right now, 10-year notes still trending lower. However, they lost a little bit of their momentum on the uptick. We'll have to wait and see what happens next week. This is Todd Colvin coming to you from the floor of the CME Group.